Hi, Alasdair. This morning you wrote again on your Substack channel with a headline, "The Dollar Calm Before the Storm." This article is so important for people to understand that we are heading for a financial hurricane, as Jamie Dimon, head of JP Morgan, has already confirmed. In your article, you took us back to 1920, 1923 in Weimar Germany. And so if you could continue the story in regard to how the US dollar will be impacted and what will be the downside if you don't own gold and silver.
Yes, the purpose of that article was really to find a historical comparison with what's happening today. And of course, the most famous and most documented hyperinflationary collapse was the Reichsmark following the First World War, and when it finally collapsed in 1923. The collapse was very, very dramatic, and it's always been something which is, if you like, in the German psyche. We don't want to go there again. It's used as an if you like, as an example of appalling government behaviour and the willful destruction of the currency by the government. No, interestingly, what happened in Germany in general, if we just look over that whole period, we had politicians trying to deal with a very difficult situation. And they were, in that sense, they were driven by politics rather than economics. There were in the government various people who actually had a reasonable understanding of the difference between money and credit, gold and the Reichsmark. And they were silenced. They couldn't, if you like, pursue the sensible policy from an economic point of view because the politics wouldn't allow it. That is the same situation we have today. So that is the background. Interestingly, the Reichsmark lost something like 80% of its value between 1918 and 1920. Now, following that period, there was a period of stability, and it was an extraordinary period of stability. The fall in the Reichsmark had encouraged, if you like, production and exports. It also encouraged tourism, believe it or not, after the First World War. You had wealthy visitors coming in from places like America and all the rest of it. A lot of Americans were descended from Germans, so you could see that there was this influx, if you like, of stability. Now, we're not talking about what actually happened to the rate of expansion of credit, but businesses began to hum a bit and all the rest of it. And between particularly February 1920 and the end of 1921, the stock market soared. It tripled. And this meant that, people with a bit of wealth, as it were, after the war, what was left, recovered their positions substantially. And there's this feeling of, wealth and things were good and it was all going well. But then in December, 1st of December 2020, the stock market began to collapse. Now, it lost 25% of its value in December that year. But then things started going downhill. And we found that from that time onwards, the purchasing power of the Reichsmark began its downward trend in earnest. And by most of the collapse was actually in the last 6 months of 1923. Sorry, I'm a century out, 1923. And that was when we had the reports of people collecting their wages in cash and then taking them around in a wheelbarrow to go and buy a loaf of bread and all this sort of stuff. The sad thing about this was that it meant the complete collapse, if you like, of wealth. It meant the impoverishment of the professional classes. the labouring classes weren't impoverished, but everybody was on the breadline, and food was getting very hard to come by. People living in the cities weren't getting supplies from the country because they couldn't pay for food supplies from the country. So farmers, farming communities, and all the rest of it were very reluctant to send food into the cities. So the situation was really very, very dire. But the interesting thing in the way this worked was there were three phases. You had the initial 1918 to 20 phase. You had the 1920 to end of 21 phase. And then you had the final collapse. This actually looks quite like the situation we have today. We had COVID in 2020. We had the fall in the purchasing power of currencies, in other words, unexpected inflation, which peaked 2 years later in 2022. So since then, inflation has declined and is no longer a problem. And we have the stock market that's absolutely soared. I mean, the S&P has gained, 50, 60% or something in that time?
That's correct.
Not as dramatic as the German stock market between 1920 and the end of 21, but nonetheless, pretty dramatic. And like in Germany, that period was characterized by increasing speculation and the feeling that things were going up forever. And what have we got today? We've got increasing speculation, feeling that everything's going up forever. And that speculation is going even further. I mean, we created new media to speculate in, things like Bitcoin. Okay, we can create a nice little story behind it, and everybody's buying into it. But guess what? They're making loads and loads of money. This is exactly like what happened in Germany in the middle of this crisis. Yeah, that middle step, if you like, the sort of the stabilization bit in the middle. That's where we are today. But this raises the thought, from 2026, are we going to be like Germany in 1922, going into 1923? Now, here we've got to look at the politics of the situation. Can we possibly imagine the political class who are currently completely driven by political considerations breaking with what happened in Germany, where they continue to be driven by political considerations into the ultimate currency collapse? Can we see our politicians getting off that track? Can we see them having a mandate to actually create massive unemployment, to let the economy basically sort itself out, stand back, and say, we get involved in the economy, we just mess it up. We're going to stand back. We're going to go back onto a gold standard. We're going to stabilize the currency. What? Do we really see that? Politicians are not elected to do that. I would love to be convinced that someone, somewhere, will step in and have the authority to do it before the ultimate collapse of today's fiat currencies and prevent them continuing on the course which the Reichsmark followed until November 2023. As a matter of interest, 2023, the ultimate collapse, then something could be done about it. But it had to collapse first. Crisis first, solution always second. And the solution was to value the Reichsmark at $1 trillion to 1 gold mark. They didn't introduce the gold mark. The whole thing was a con trick, but it worked because everybody wanted it to work. And if you put it in terms of dollars, before the First World War, when both the dollar and the mark were on a gold standard, you had 1 mark was worth 23 US cents. What this meant was at the final reckoning in November 1923, you had $1 being the equivalent of over 4 trillion Reichsmark. That was the extent of the collapse. Now, please, someone tell me how we get off this roller coaster. That third stage is what we have ahead. And the escape route is obvious. But of course, nobody's taking it yet because everybody believes that interest rates are coming down, inflation's not a problem. It's exactly where they were in November 1921. That's where we are emotionally. It's exactly the same. But the escape route was get into hard gold-backed currencies. But there are no gold-backed currencies at the moment. Now, I suspect that China and Russia will go on to, they will back their currencies. But can we buy those? No, we can't. It's not available to us. I mean, I suppose you could do something on the black market, but do you really want to do that? No. The answer is to buy gold, which throughout history and in everybody's common law is real money, with everything else being credit. Everything else being credit. And just to, if you like, sort of put a little bit of a final anecdote on this, by late 1923, you could buy a large house in Berlin, in a nice, swanky part of Berlin. And remember that between 1920 and 1921, all the wealth that had accumulated meant that property prices and all the rest of it in fashionable areas were through the roof, just as they are apartments in Manhattan or Mar-a-Lago in Florida or whatever. I mean, all these things were incredibly valuable. Well, you could buy one of those for $100, which at the time was roughly 5 ounces of gold. That's where it sank to in late 1923.
Wow. I did hear that in 1923 that income generators, the working person, was being paid twice a day just to be able to keep up with being able to afford to purchase something in the evening. If they only got paid in the morning, their currency had devalued that much, they had to be paid again to cope with the afternoon.
Yeah, the inflation. Yep, man.
Unbelievable.
Yeah. I'd just like to add a point, and I know I've brought this up once before, but people don't underestimate the numbers that Alasdair is talking about. And could it happen again? Oh, yes, it could. And I'll just give you some basic numbers here. I'm going to convert the currency into seconds, right? So in 1 year, we have 31.5 million seconds. If you want to look at a billion seconds, you have to go back 28 years, 1997. If you want to look at a trillion seconds, you have to actually go back to 30,000 years before Christ was born. That's a trillion seconds. Now, America has got $37 trillion in deficit. That's the government, 37 trillion. This is not figures out of the air that Alasdair is talking about. This is real stuff, and it's going to happen. So, 6 ounces of gold to buy your house. I mean, what a wonderful position to be in if you've actually owned physical gold and silver. Yeah. And all this information, guys, comes out of Alasdair's Substack channel. I don't underestimate it. Go on to Alasdair's Substack, pay $150 to get the full stories, and you'll never look back financially.